Thank you so much, Gabby, for coming and sharing kind of how you do things at Harlem Capital. So why don't we start a little bit by, can you tell us a little bit about your career journey and what led you to this role of investing in startups through Harlem?
Personal background, I'm originally from Maryland. I'm Haitian and went to Washington, St. Louis and studied chemical engineering. For me, the core threads that connect the random dots in my life have been, I just love trying to solve really big and interesting problems. But I've always been drawn to those that impact communities that I really care about, as well as are just a form of inequality that I am mad about and angry about and shouldn't exist in the world, at least in my view. And so that's first where I started, because I just wanted to learn, what does it look like to solve problems on a really big scale. I ended up going to work in R&D and product in the food industry, which you might be like, that is even more random. But found that I loved building and creating new products. I was always working with like early innovation teams and entrepreneurs through the CVC arm of the company, but felt something was missing, right? Like I wanted to be back building tech products that impacted larger communities. And to me, technologies have always been the biggest way to scale and solve problems. And so I wanted to transition to that world. To me, that pivot point that made sense was business school. So ended up applying to business school, getting in pretty early. And then I started to think about, okay, like how do I actually get into the space that I'm interested in? I'm not sure if I want to be a PM at a big company or start a company or just anything in the world. So let me figure out what that looks like through early internships and projects. And I ended up interning at Harlem Capital back when we were still an angel syndicate. So we were not as big as we are today. It was just my fellow co-partners investing their own money into startups and small businesses in the city. We had a coffee shop, we had a dentist office, and we had startups. So we were doing quite a bit at the time. But I joined on the startup side, where we'd really focused, and the team astutely, right, started connecting with people in their network who were, building great companies but had challenges raising capital, and started investing in that target. And by virtue of our networks, those were largely women, people of color, and we started really digging into the problem and saw, okay, there's this big market inefficiency. There's a huge opportunity for impact, huge opportunity for scale. Let's go tackle that problem. There are a lot that has changed as we've grown our fund and scaled. So I'll talk about that. I think the one thing that has always been the same, and that is our core North Star, is investing in diverse founders. We have this tagline: we want to invest in 1,000 diverse founders over the next 20 years. And that's continued to grow and evolve, over time as well. But in terms of how we invest, so out of our second fund of 134 million, we are laser focused on investing at pre-seed and seed. I think in the earlier days, we may have been a bit more flexible with that range, but found that's where we love to help support founders the best, to help them accelerate and be the most value-added VCs they have leading their rounds and help them get to the Series A and beyond. And we are pretty much narrowly focused on things around like the B2B software space. So it could be anything tangential to that as well. So B2B fintech or commerce enablement or prop tech. But really just believe in the power of software for both leverage and scale, as well as the types of problems that we can solve.
Maybe you can tell us about an investment that you've made, kind of what the journey was that you went through from the time that you met the founder to building the conviction to invest in them.
I'll pick one from Fund 2 as well. That might be a little bit different than what I've talked about earlier today. But it's a company called Lami. They're a B2B vertical SaaS insurtech company based in Kenya. Helping to expand access to insurance across the continent of Africa, but starting in Kenya where they're based. And this one actually starts like a lot of the businesses that we might see and invest in ultimately with a pass, right? So I first met a different company, a fintech company, met with the founder, was going through diligence and ended up passing on the opportunity. It wasn't quite the right fit for us. But that founder had a great experience chatting with us and our team and said, hey, here's another great founder, exceptional woman founder that you should meet and connect with. And this was back in, I think, 2020. So I met with Jihan, who's the founder, and I think far and away, like she is just a standout individual. Incredible business leader, business mind, focused on product and impact and all of the great things you really want to see. Transparent, has great communication, and I think has this remarkable ability to inspire people and bring them along the journey with her. And I think that was something that I really honed in on. But they were too early. They were not quite at the stage where we wanted to invest in that company, but use that as an opportunity to build a foundation of the relationship, kept up with her over time. And eventually in 2021, when they came back to market and wanted to raise, felt that they'd hit the metrics that we were looking for, had gotten to know and trust the founder a lot. And so from that point, the investment decision was really easy because we built this relationship and connected. And again, I think the founder just being this exceptional person that I wanted to work with. And so at the time, they were much more of like an embedded fintech company. In the last couple of years, they've transitioned their model to be more of a vertical SaaS business and have continued to really accelerate, particularly in the last year. And that's been awesome to see. And, there's ups and downs in the journey. And I think I just look for people who are resilient and can kind of work through anything. I really do believe that this industry, this world really runs on relationships. And it's really about the connections you're able to build. Someone you might meet in 2019, in 2025 might start a new company. And so I just really believe in just the power of building great relationships with people.
Yeah. So, if you're in the founder seat and you get a no from an investor who's like, keep me updated, how do you know the difference between whether that's like a polite brush off versus like they really mean it and they want to stay in touch with me?
I think it could be a brush off, candidly. I think the way to know the difference is about the strength of the interactions you had in the diligence process. So is this a keep me in touch after the first meeting where it didn't go further? Or is this a keep me in touch because we went to our partner meeting and just couldn't get over the line on one or two specific things? And if you can hit those specific things, then we can have a conversation later on for the firm that might invest at multiple stages. I think those are the more serious keep in touch, or even the investor saying, hey, let's just put it on the calendar for 6 months from now. They're pretty serious in that way. So I think there's a bit of discernment in that, but I would just look to how far did you get in their process? What was their reason for passing? Did you build a good relationship with them as the markers for whether they're serious or not?
Yeah. And then do you have any advice for how founders should kind of keep in touch with investors that have passed on them?
I think that a lot of founders ask about can I just add you to the monthly updates? I think those are valuable if they're always going well. I think then many things do not. I think what's actually better is sending a specific packaged update to an investor versus just having them on your broader investor list. So say an investor, you meet in January, they pass, you say, okay, I'd love to keep in touch. Once a quarter, kind of package those wins and the areas that you might need help on or the things that you're working through versus the broader update. Because I think an investor might just kind of flip through and say, it's not going so well, I'm not going to keep up with this anymore, versus something that's much more intentional and focused on this is who we are, this is the relationship we built. I want to build your trust and credibility with you over time. I would say the things that tend to trip people up the most, it's surprising, but it's communication tends to be the biggest. Founders who are not responsive in a reasonable period of time, who try to hide information and not share their full data room, or an investor might ask, what's your model? And just not be ready, I think, for the fundraising process. So it's communication, it's sort of preparation, having your data room, having your, FAQ doc that you've compiled for all the questions you might be getting so you don't have to keep answering them over time. And then the transparency sort of through the process. We try, and our number one value is over communication. And so we look for founders that also, have the same ethos so that we can have a good working relationship. And then it's really about articulating the why you, why this, why now. I'm much more interested in the why you in particular. There are so many different ideas. A lot of people have the same idea, but I'm really betting and looking for that one unique individual who is the winner in the space and will win in the future. I think a founder should look for someone that you trust, someone that you think will be in your corner through the ups and the downs. Unfortunately, I think hard markets reveal character, and have seen examples where some VCs pull away when it gets really challenging. And so difficult to ascertain directly, but I would always encourage founders to actually just reach out to other founders in the firm's portfolio. You can ask for a reference, or you can just do your own. I'd recommend just doing your own to understand who are they really behind the scenes. And I think founders will give founders the honest answer. Depending on how you think about your broader cap table, not just the individual, maybe it's about the balance of skills that they may bring. So there might be one investor who is your go-to product people, another that's go-to for talent and hiring. And so I encourage founders to also think about what does that balance look like? But on the individual, I think it's the person you trust, them being able to support you through the ups and downs, as well as they are aligned in your vision for your company, because it's your company, and we're just along for the ride to help guide and support where we can. Best way, just by email. So it's on the website, Gabby at harlem.capital. Just send me a note and we'll be able to review. whether me or someone on the team. There's also like LinkedIn and Twitter, but email is just like the simplest and most direct.
Awesome. Thank you all. Thank you, Gabby.
Awesome. Thanks for having me. It's so fun.